Welcome back to Buffalo Tax Strategies. Today we're going to be talking about the Work Opportunity Tax Credit. If you're an employer that's seeking to optimize your tax return, this credit might be one way to do so. So in today's video, we're going to discuss exactly what the credit is, what you need to do to get it, and exactly how beneficial it can be. Let's do it. What is the Work Opportunity Tax Credit, or WOTC? It is a federal tax credit for employers who hire individuals in specific targeted groups. Now, what are these targeted groups? They happen to be veterans, ex-felons, designated community residents, summer youth employees, and SNAP recipients. So if you suspect one of your new hires happens to fall in one of these categories, you may be eligible to get this credit. But there's a few things you're going to have to do first in order to claim it. Now, the first thing that you're going to have to do is get approved. Now, you need to have your application for this credit approved before you're able to take the credit. So what do I mean by that? Now, first, you're going to have to fill out a Form 8850. Now, this is a pre-screening certification request. It is a rather simple 2-page document that you're going to fill out. You and your employee are going to fill out, and it ultimately will distinguish if they in fact end up in one of those targeted groups that we just mentioned. Now, if they do, then you're going to have to fill this out and also send this in along with what they call the Individual Characteristics Form, the ICF form. This is additional information about the employee and their situation. So once you have these two forms filled out, you're going to need to send those away via mail to the Department of Labor. I will include that address in the show notes as well. So the thing here is, if you do not send this in, or if it is not postmarked within 28 days of the hire, then the application will be immediately denied. So there's a little timing that you're going to have to, think of as well. So I recommend having these two documents at the same time you do the other initial hire paperwork. So if you have this in with the same package as your employment paperwork, you're getting it all done at once. I think that will be pretty helpful. So once you have these and you've gotten your approval, so the employee will work for you for the remainder of the year. Now, this tax credit is actually claimed on your end of year income tax return. So you're not going to have to worry about it as you're going. It doesn't get sent in with the other payroll reports and things like that, or the other payroll filings. It's going to be sent in with your tax return. So what does that look like? You're going to have to talk to your tax accountant, but is a pretty simple 1-page form attached with the tax return. And so that is this. It is the Form 5884. And so you're going to need 2 pieces of information to fill out this form. You're going to need that particular employee's W-2. So you have the amount of wages that they've worked for you for the first year. So you have the amount of wages, and then I recommend getting a payroll register. So you also have the amount of hours they worked over the course of that year. Because as you can see here, you're going to need to know not only their wages, but their hours. So for example, if they worked for you at least 120 hours, but fewer than 400 hours over the course of the year, you're going to be eligible for a 25% credit of their wages. So that can be really, really helpful. So now if they worked for you at least 400 hours, now let's say they really worked out, they were with you an extended period of time, you're going to get a 40% credit on those first year wages. So, this could be something that it could be very substantial. It is something that you're going to want to take advantage of, again, if one of your employees falls into one of these targeted groups. So I hope that helps. Thank you so much for joining us. Talk to you soon.